Hell yeah. 1.5 R. And this was all my kind of analysis from yesterday. I didn't really trade at that time, but I did a quick review on what happened on that day. So let me just break it down to you guys. Not a really strong R yesterday though. Maybe because of CPI. I don't know. But I didn't feel like a strong a strong connection and a strong like confidence into like what the trade is gonna turn out. But I gave myself some questions to ask though. Let me just go back in here and come back to my weekly analysis. Okay, so first we will go to the weekly. So we marked out the last week's high, which is here, which is here, which is the all-time high, and it eventually broke it. But we still need to mark it out. The lows, I mean, you can do it, but it obviously will sweep out the daily lows first. And so I marked out the daily lows and highs and low over here and here. On a 4-hour chart, we should mark out the one at 10 right here. These two. 10. And the 1 hour. The 1 hour at 1, which is quite similar to the thingy, to the 4 hour. But a good thing is that there was a 4 hour order block, as you can see over here. 4 hour order block and an order block resting right below liquidity. So we would still need to keep an eye out on the direction of the order block, but as his liquidity has more confluence into it. I think that's everything that I did for market open. So these were the levels that I was thinking to put my eyes on. Let's just go to the 1 minute. So we found our high probability entry at around around like 3:15. So not that bad of a day, not that bad of it was a quick, strong and easy day. Quick, strong and easy, what's that? Okay, so CPI news came out at 1:30. Let me just go back there to see, to show you guys what happened on that day. I'm in Italy at the moment, you know. Yesterday I took like a 2 hour flight, but we came here at like 4 p.m. Didn't have that good of a sleep. I did my analysis at the airport. So basically yesterday it turned out like this. Nothing changes that much. Aligns with forecast. CPI is a bit worse than last year. Basically that means it's bullish for cryptos and stocks because the value of dollars is down, so people can buy more. Basically what it is. Okay, so as soon as 1:30, which is okay, not bad. It's not 1:30. It's 1:30 now. I'm using Italian. Yeah, I'm using Italian um, time. So basically, at 1:30 yesterday, price came up, literally swept the 1 day high, the previous day high. It literally swept one time and came back down. Showed a reaction. Just a reaction to the one day high, not forming a trend just yet. Yeah, so this wick down and all of these, just a reaction. And also the Also, the family gap that was respected acts as a confluence as well. So basically, it's like kind of in an uptrend. So it formed in 1 hour high over here. On the swing high over here. But the good thing is, after 2 p.m., after 2:30, says so I wrote bullish move after market open. So show optimism in the market after CPI news. As we can see, obviously the first move is always wrong. The first move is always wrong. But that's not really like a rule, but it just adds up to your analysis. Okay. So price as price went up, it didn't tease. It teased out 1 hour high. It didn't actually go liquidate it. So smart money is not interested into this type of area. Um, I mean, to be a bit like more in depth, I say they they're not interested into wrecking shorts. Is that what it is? Or maybe they don't want it to move all the way up just yet. I don't know. But over here, price went down. I would say this wick, this candle is kind of a manipulative candle. Um, brush this one. It was kind of quick because price didn't actually tap into any zone to show that good of a reaction. Um, and so yeah. So as price approach a strong liquidity zone 4 hour order block, as we talked about. I don't actually want to go back. You know that's a 4 hour order block. So they would actually want to drive price to this level so that so that they can what's it called? Um fill more buy orders, fill more resting buy orders to fuel their confluence to the upside. That's what it is. So as the first tap into strong liquidity zone, obviously there must be a what's it called, a reaction to the upside. The thing is, it actually respected the breakers block. It actually respected this order block, which then we use as a breaker block because our bias was to go long. Yeah, so they came down, stop hunt. So we would use this stop hunt as a stop loss. And if price break above this order block, we will use it as a breakers block. If there's another fake out though, because you don't actually enter off a wick over here. You would actually enter off here. You actually have to wait for the candle to close to confirm that it will eventually go up. So yeah, my normally I would put an order here, my stop loss over here, targeting the all-time highs. But my only question was, why did I not feel comfortable putting my stop loss here? Like, I did not see that strong of a long bias, so I didn't feel comfortable leaving my stop loss here. Maybe I wasn't feeling like I wasn't in the market at that moment, so I didn't feel comfortable. So I just did what I'm comfortable doing, reading the markets, and yeah, stop loss is here. 1.4R. So basically, in a 100k out, in 100k I'll make 1k4. That's not too bad. A lot of people can say that you can use this fair value gap though. Fair value gap overlapping a breaker's block. I'm not that type of a person like who trusts fair value gap that much. I would only use it as a confluence to, uh, saying, to fuel my. At the end of the day, we only want to see which direction that price is driving towards. we don't really want to find the best entry, if you know what I'm saying. Like this February gap, I'm not a big fan of it. February gap is not as strong as an order block, and let alone like it literally just a 1 minute February gap. You could say that it might be an entry overlapping da da da. Um, but if I were to use that order, to use that February gap, the stop loss could be here, maybe even here, maybe even a bit lower if I'm being generous. Um, that could be what? How many hours would that be? 2.7, not that much of a difference. But at the end of the day, we are here to preserve our profits. And trading is if you don't lose, you're basically profitable. You don't have to win a lot. You just have to don't lose. Some psychology. It's a mental game, sir. So that's probably it for yesterday. Let me check if there's no news today. No, it's not. There's no news today, and there's PPI and unemployment claims tomorrow. I wouldn't expect it to be much difference. Look at the forecast. So out. I'm out later. I'm out to go see Italy later, but I'll eventually do some market research when we get back. But that's basically it. From the crypto picks that I give the other day, I will run like a Sortino and maybe an what's it called, Omega ratio. But basically, these are the coins that I'm eyeing on. As I show you, not financial advice. Invest at your own risk. But yeah, we can see broke this liquidity level, trying to reach up top. I didn't mark out the thing for this. Neither did this. Not this either. But yeah, you get the message. I'll start seeing if it's the right fit for me, if the risk is high. But basically all these coins fits the background of a good coin. So I'll do some work today, and then we would DCA slowly into it. I would also have to estimate how long of a bull run that would be, so I could DCA a little bit early in the first 1/3 of a run. You see it, but yeah, it was alright day. Thing is, you don't have to actually avoid news day, but you have to be like mentally strong enough to not be shaken out by the volumes, by the volatility and high volumes. Um, so yeah, I'll see you guys tomorrow. Yes, sir.